Good morning, good afternoon, and good evening, and welcome to M-Tuned. This M-Tuned is M2's podcast series. It is focused on meeting people who are helping to build, shape, and grow the digital asset ecosystem here in the UAE. This is our second episode. Last time around, we had Abdullah Al-Dari from the Abu Dhabi Blockchain Center. And today we are fortunate to have a fantastic human being and also somebody who knows the UAE well and the area that we're going to talk a lot about today, which is about really institutional crypto asset adoption in the UAE and beyond. And I'm very pleased to welcome Dr. Bhaskar Dasgupta. Bhaskar, how are you?
I'm good. Thank you very much, Glory, for inviting me. And I'm looking forward to this chat.
Look, it's always a pleasure talking to you, and I mean that, you know, not only from a, I guess, digital asset and business perspective, but also at a very much a personal and human level. So always interesting. One question, you know, I think it's always good to ask. You are a doctor. Can you just give me, 2 minutes? What was your PhD in?
So let's start by saying that you wouldn't come to me for medical advice. If you did, you will get some advice, but I would strongly advise you not to. But to answer your question, I did my first doctorate from Manchester, and I did that in artificial intelligence. This was back in the 90s. And the second one was from King's College, London. And this was after 9/11 happened. And I tried to do a little bit of my own contribution by trying to figure out if I can figure out how terrorists work on selecting and executing targets, then maybe I can reverse engineer it to help out with counterterrorism efforts. So that was the second one. And the third one, which hopefully I should finish soon, my doctoral viva is next Thursday, is on the history of food, specifically how did the British deal with spices. So that's what the doctorates are in.
Oh, good. I don't know what to say. So it is not the case of doctor. It is doctor, potentially becoming doctor, Bhaskar.
I'm going to take off.
Well, look, I don't know. I know very few people who have two. I have met some, but three I have not. So I don't know what to say. We're in the presence of greatness, everybody. Let's leave it there. And best of luck with your viva. So back to today's episode, we were talking about institutional crypto asset adoption in the UAE, and really wanted to pick your brains on that subject. So for folks who don't know me, I am fortunate enough to be M2's Chief Commercial Officer, and so have a keen interest in this area, but also really trying to understand more what's happening in the UAE, what's happening in Dubai, and what's happening in Abu Dhabi as well. So maybe what we can do is we can start off with the question, Dr. Bhaskar, which is, what trends are you observing in the adoption of cryptocurrencies by asset managers and hedge funds in the UAE?
Okay. So what usually happens is that you can very clearly see three trends when it comes to, if you will, virtual assets and asset management. The first, which has had some stumbles, is actually tokenizing the fund itself. Putting it very, very simply, instead of you distributing the units, you distribute a token, NFT, if you will, which contains all the details of who owns what, when, where, what were the contributions, returns, so on. So that's the first trend that you can see. The second trend is actually where you have got asset management firms which are, if you will, investing in virtual assets, and that is expanding quite a lot. And the last one is where you've got traditional funds, if you will, something like money market funds, which are getting tokenized and sold. So roughly these kind of three things are out there. The money market tokenization has picked up steam, and it's mainly a situation with in the US, and I think it's going to show quite a lot. And the benefit of that is that it's almost like uh, a very interesting way of looking at it as a stable coin as well, because it's near money. You can actually get it converted almost immediately. It provides a yield. So that's the first thing. The second thing that I'm seeing very, very strongly across quite a lot of funds, and this particular thing started 3, 4 years back when the hedge fund started to actually either be a crypto hedge fund, if you will, that was just investing in crypto, or as is the case right now, is that normal funds have started to look at virtual assets and crypto either as a yield or return boosting mechanism or as a hedging mechanism or both. So these are the trends that I'm seeing. The first one, which is, as I said, the broader perspective of funds being tokenized and sold. As I said, it had some hiccups. I don't think we have actually reached the situation that it's ready for wider adoption, but the money market tokenization piece is giving some good forecast for the future.
And look, if I can have a follow-on question there. So some people out there will know the likes of BlackRock and BlackRock's Biddle fund. Do you know anything about that or anything you can share?
Sorry, could you just add a bit more color to that, please?
Yeah, so BlackRock have brought out a fund called Biddle, BUIDL. And so we're seeing a lot of people, I guess, become interested in that, and there's been a lot of uptake in it. And I think it fits what you were talking about in terms of near money. It's that money market fund style tokenization, and it's providing that near money piece.
I haven't heard about that particular fund itself, but as I said, the interesting piece that I see that is getting discussed, and I'm involved in some of the few things on that matter, is that traditionally you had the stable coins which were backed by US dollars or near currencies like that, either treasury notes, bills, etc., etc. But now I think they flipped the argument on its side a bit and said, okay, let's just take a standard money market fund, demand deposits, if you will, but that money is invested in money markets. And can that be used as a money market investment? And what actually came out was that it started to behave, if you will, like a stable coin. So I think it's just such an interesting phenomena, and I've got lots of hope in that.
Look, it's one of these things, and I know you've been working in this space for some time, where people talk about these things, and then it is the case of gradually, then suddenly, tokenization of assets, and then now we're getting to the stage where it's actually really happening. I, for one, thought it would happen much sooner in my naivety, probably, but now it is really starting to happen with financial assets. But another follow-on question. There's a lot of interest in tokenization of other assets, such as real estate and things like this. So I would love to pick your brains as to where you think tokenization of real estate is, or when that will become more broadly adopted.
You have to excuse me. I'm going to put my jaundiced eyes in now. My issue is, and perhaps I'm too old for this, but my question is that if I take a step back, a token is nothing but a claim on an underlying asset. If you're talking about Bitcoin, obviously that is a different kind of a virtual asset. But you asked me about tokenization of some kind of a real life underlying asset. Now, one of the most common of those is a dematerialized equity share. That is nothing but a token which represents an underlying company. Now, when you look at it from that perspective, the model becomes very clear. Your underlying asset should be an asset, ideally a physical, real, or a financial asset, and it should be doing few things. You can have ownership. It does give a return. You can transfer it. It's easy to custody, so on and so forth. So when somebody comes to me and says, I would like to set up a retail tokenized fund, or can I tokenize these block of flats? The question that I always ask is the business model going to stand up even without tokenizing it? If the business model stands up without it getting tokenized, then the question I've got is, what is the additional benefit that tokenization is going to provide over and above the underlying asset? Now, that could be number one, you are able to access new sources of liquidity or market share. So you might turn around and say, people might, for example, the crypto boys might not normally invest in a real estate, but they would love to buy tokens. Okay, that makes sense. The second thing could be, I'm going to reduce transaction costs or friction costs. Fair enough. The third thing is, I might make the payments easier because using traditional forms of payment, it takes long, so the transaction cost will be lower, blah, 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 blah. Okay. So the jaundiced piece that I get is that people tend to focus either on the technology or on the second half of how it's going to be good, without having a very good argument whether the underlying asset is good or not. If the underlying asset is not good, then you can't do anything. So to give you an example, if you're talking about blocks of flats and you're trying to sell tokens to retail investors, you're trying to sell something that is highly illiquid to retail investors. As an ex-regulator, that fills me with the heebie-jeebies. So let's just say the jury is out.
Okay, understood. And if I can take a step back for a second as well, Bhaskar, where you've had a fantastic career. How did you manage to get into crypto assets or digital assets in the first place?
So my first experience with crypto assets was here in London, all those years back, right after the launch of Bitcoin. And it was quite the done thing as to see whether we can get these things distributed. And then once I came down to Abu Dhabi, I was very, very privileged to work with my colleagues in the FSRA, which was one of the first regulators to issue virtual asset guidance. And that's where I got involved with bringing other virtual asset service providers, broker dealers, exchanges, custodians, people who were thinking about issuing tokenization of funds, so on and so forth. I think it was slightly early. The institutional rails weren't there. Had quite a lot of discussions with the central bank and other places. Then after I left ADGM, I started to get involved personally by investing in firms, being the sort of on the board of virtual asset firms. One of my firms is helping with applications. Epics, for example, helps with the reporting of NAVs for crypto funds. So it's deeply in my interest to actually make sure that this particular ecosystem grows, but from an institutional side. So happy days.
Absolutely. In terms of drivers of adoption, Bhaskar, what are you seeing as the perhaps the catalyst for institutional adoption of those crypto assets? So you said, look, how you got involved, but are we at a tipping point now, or are we already past that stage?
So again, tipping point. First of all, I think we have to define what tipping point means. And if I have to give it a shot, I'd say the day virtual assets or crypto become boring as just yet another institutional asset class that an institutional buy side or a broker dealer or a family office can buy and sell crypto or virtual assets just like they would do for a bond or a call option or an equity share, is where I would say it has arrived. But if I go back into the sort of, it's a journey. So if you're talking about the which part are we in the journey, I think we already talked about the money market piece. I think there is huge clarity over what the institutional grade regulation should be. We have the banks who are starting to give payment rails and banking services. We have proper custodians. We have got a fairly good handle on the contracts, that is the legal side, as well as the smart contracts. We actually have people putting their hands inside their institutional pocket and actually investing in them. Depending upon who you ask, anything between 2 to 5% of all hedge funds are starting to invest in them. So, is it all done? No, I think there is still quite a lot of work to be done. But I think all the building blocks are in place. Now it's just a question of continuing on. I mean, I'll give you an example. I'm sure you are monitoring the US elections. When was the last time you had two presidential candidates fighting amongst each other to support crypto? You know, happy days.
Yes, exactly. We live in interesting times on that topic for sure. 2 weeks to go, I think, pretty much to the day. And one piece to pick up there. So 2 to 5% of hedge funds, is that 2 to 5% of all the hedge funds are investing in crypto, or 2 to 5% of their portfolios are going into crypto?
It's the former. So I think almost everybody has got eyes on crypto. And as I said, it can be in different ways. Either it could be investing via the ETFs that track crypto, or they might be investing directly into crypto virtual assets as an asset class in itself, or they are using or they are investing in crypto as a hedge or as a return booster.
So still a long ways to go. Okay, great to see. I guess that number growing. It's not sub 1, but 1%, 2%, up to 5%. Still a long ways to go till we're hitting kind of double digits and then into the 20s and so forth.
Look, I mean, I'm how would I say, optimistically paranoid.
That's the title of your next book.
I hope so. Optimism, because obviously, look, we are dealing with it. I can see the sense the technology is actually going to drive down the cost of operations, and it's going to provide some very, very fascinating financial engineering ways. The paranoia is that during this transition, we will see quite a lot of blind ends. We will see quite a lot of dodgy stuff happening, which we have seen already. We are going to see quite a lot of losses, and that is another thing that worries me on the retail side. I'm sitting here in London at this moment, and last year, I asked my two cost centers, and both of them said that some of the conversations on the schoolyards is about which virtual asset token that they're buying and selling in the schoolyard. The amount of transactions in this industry, for example, in Indonesia, is about 20 times that of equities. Those are the paranoia pieces that kick me off. I mean, people can and have gone burnt on this.
Yeah, but the level of growth, adoption, interest, not just at the institutional level, which is obviously what we're talking about today as part of this podcast, but yeah, at that Gen Z and even younger age demographic is real and growing. They don't know a time without crypto, which is, I think, mind bending, but also just the way of the world and the growth that's yet to come. In switching gears for a second, so in terms of investment strategies, that these institutional players here in the UAE, when it comes to crypto, what kind of things do you see them doing with crypto?
So I already talked about what sort of funds would be doing. So as I said, either they'll invest in crypto as a crypto hedge fund, or they will go in and invest in an ETF, which is underlying is crypto, or they will use crypto to hedge, or they would use crypto to boost their returns, or a combination of that. But so that's one side. The second side is that we look at the other participants in the market, and I'm just talking about the institutional side. And there are the two people, or maybe three types of people that should be of interest. The first are corporate treasuries. Now, the corporate treasuries are starting to take a very, very close look at this. And I used to work in HSBC before in the transaction banking side, and I used to constantly keep on going and talking to corporate treasurers. They are worried about two, three things. One is how to make payments better, cheaper, faster. And quite a lot of the MNCs have got multiple countries, multiple bank accounts, multiple banks, and it's just a humongous nuclear powered paperclip that is done for something that is as simple as exchanging money. And crypto and payment rails, if you fix it, is going to be very, very interesting for a corporate treasurer. So that's first. The second thing is that in many cases, if you think about it as a closed loop ecosystem between buyers and sellers, corporate buyers and corporate sellers, instead of you having to go through two banking chains and having letters of credit or SPLCs or things like that, all which is because you don't understand the other person's risk, an NFT or a crypto actually removes that issue. So that either making payments to suppliers or to customers or receiving it, that is something that corporate treasurers are starting to take a very close look. So that's a second group of investors and participants that are happy. The third one are the ultra high net worths, and this is, I would say, quite often mainly people who have made money in this area, and they invest either in the funds or in tokens or in institutions that are doing it. So there is quite a lot of investment coming in from there. And the last piece are the family offices, either single family offices, multifamily offices mainly. The discretionary guys or the external asset managers still don't have the systems or the knowledge. But the single family offices, the multifamily offices are definitely making an allocation of 1, 2, 3% into this asset class.
Okay, fantastic insights there. I'm sure, like many people listening, watching, they're making notes. I know I am. So yeah, thank you for that. Again, one of the critical areas, that comes up when it comes to adoption of crypto assets really is the regulatory environment. Would love to get your thoughts on the regulatory environment here in the UAE. And people have views, and they look at, I guess, at a federal level, but also Dubai, perhaps, in comparison to Abu Dhabi and the FSRA. So yeah, would love to get your thoughts on that.
Okay. I mean, look, as I said, I have been involved in the regulations in various places. And of course, recently, as I've mentioned, I did work for FSRA and ADGM. But besides that, working as the Apex representative, as the secretary to the Middle East Investment Management Association, we are dealing and speaking to all the regulators. Plus, I talked about my other firms that are also involved. So if I look at specifically what is happening in the UAE, but let's not forget that there is also quite a lot of work being done in Bahrain. So one obviously clear-cut distinction between Bahrain and the UAE is that it's a unified regulator. You can get things done very, very quickly. The banks in Bahrain are also happy to give you bank accounts, not just the capital and the operational bank accounts, but also the client bank accounts, which is a very, very big thing. But that said, if I bring the conversation back to the UAE, there are 5 main jurisdictions that you need to be thoughtful about. As you very correctly said, the first one is the federal regulatory environment. And there are 2. One is the central bank. And I would encourage your listeners to, if they can, take a look at the website of the central bank. They are doing some fascinating work, whether you're talking about the work that they were doing with stable coins or the financial transformation program that they're planning to. It is one of the most progressive central banks out there for them to be actually testing this. That's the first one. The second one is ESCA, if you will, the capital markets as well as the asset management regulator, and they are working quite closely, and they have issued some rule books which relate to crypto and virtual assets. Now, besides this, you have, as you mentioned, some of the Emirates and other sub-regulators, if you will. And there is literally a hotbed of innovation that is happening and work. Some examples. The Ras Al Khaimah Authority has issued some fantastic regulations around the DAO, the foundations, etc., etc. Then moving down from the north, you have got DMCC, which has got quite a lot of firms sitting there and doing trading, especially the family offices. And then DIFC has issued regulations on this. One of my firms is, for example, a venture capital fund, which is hoping to tokenize as well as invest in tokens of its startups. And then we are talking about VARA, which is the Virtual Assets Regulatory Authority, which has become extremely popular. They literally started from a clean slate, which helped. And then finally, we come to ADGM, which perhaps might be called as the first regulator who issued virtual asset guidance starting from 2017 onwards. So as usual, it depends upon what you want to do, what do you want to sell, and who you want to sell to. But let's just put it in this way. This is the kind of distributed regulatory landscape you actually need, because the financial models that are starting to come out and the operating models that are starting to come out in the market, if we were all reliant on just one regulator, you'll be stuffed. But because there are these different regulators with different investors and legal things, we are literally blessed that you have a multitude of regulations that you can pick and choose. So all good.
Thank you for that rundown. Okay, again, I think people making notes, and again, me too. In terms of, I guess, barriers to entry that may exist, what challenge are you seeing for companies, for corporates, for institutions who are looking to potentially get into the area?
I guess the first thing is that what you have to remember where they are coming from. The very large number of institutional players are coming from, as the name says, institutional traditional ways of looking at securities. So equities, cash, fixed income, derivatives, commodities. And they have hundreds of years of sort of knowledge, experience, terminology behind them. So for you to jump from that treatment of, let's say, securities, cash, etc., to the new terminology of virtual assets is a big jump. And I think one of the growing up things that this particular industry has to do is to make it boring. You have to have the same kind of terminology as that of the others, rather than try and force them to select something that is just yours. If you do that, then you will be condemned for this particular asset class to be on the outskirts, just dealing with 1%, 2% at best. The ideal situation is that you want to use this technology-driven asset class to become, if you will, just flip everything else into this model. So one way of doing that is to not talk technology. Try and explain this from the perspective of the same language that others understand. Nobody cares about NFT, but if you explain to them how this particular technology is actually going to help, contain all the information that you need, now that is of interest. If you can start saying that you've got quite a lot of investor base who has already invested in this, now we are talking. The other barriers to entry are obviously provision of banking services. That is an issue. We also have got, let's just say, lack of providers who can seamlessly provide services across all asset classes. Look, it was a different matter that when Mohammed, John, Abdul, and Shiva decided, I'm going to put in $20 buying up a sliver of a Bitcoin or an Ether. That is a different investment philosophy on a retail side. But when you're talking about an institutional investor, 60% of their investment might be in real estate. And literally, you're talking about mortgage deeds and contracts and mortgage-backed securities, all that stuff. And then equities. And then you're talking about bonds. and then suddenly you're starting to come in and say, oh, something new has to happen. Make it easy for them. So the barrier to entry is for the industry to understand. They have to pitch it and explain it in the words that your customers can understand. But I think it's everything is there. It just needs to get strongly pushed. All these issues around payment rails, KYC, the travel rule, custody, providing a single provider which can deal with every asset class. They're coming in. You guys are doing that, so I'm quite excited about it.
Thank you for that and those insights. So, one final question. Look, as we look ahead in terms of institutional crypto adoption in the UAE, how do you see that playing out in light of the clear regulatory environment that exists here, which I firmly agree with, and on your points there. We also have seen, I guess, a number of traditional financial institutions, move into the digital asset space here in the UAE. There's obviously a lot going on the retail side. It feels like all the ingredients are here. So yeah, what does the future look like based on those things? Are you still with us? Can you hear Bhaskar?
Yeah, I don't know. I was just hearing it twice, so I hope you
Okay.
can hear it.
Yes.
Would you mind just giving me a summary of the question again, just to make sure I understand?
Yeah. So basically, hopefully any echo is stopped, but effectively, if there is kind of regulatory clarity, as you mentioned, we're seeing the institutional players that are here, the large banks and asset managers, investment managers that are here. We're seeing on the retail side, strong levels of understanding and adoption. What does the future of crypto adoption look like, especially on the institutional side here in the UAE?
I think let's just put it in this way: if I have to paint a picture of what it's going to look like, let's say in 2 years, this is what I would like to see, and I think we can achieve it with a fair wind and God willing, depending upon which religion you follow. But the following institutional pieces need to be there. I think the regulations are there, and I think the regulators also have to look at one very important thing, not just licensing, but please take a look at what is the overall ecosystem that you're trying to develop. You need to look at the secondary market. You need to make sure, look, licensing new firms is the easy bit. What we need to now focus on is to make sure that these licensed firms are profitable, the ecosystem is working. And for that, you need to bring in new issuances, new models, be flexible with it. You need to have a good way of actually bringing in existing as well as new allocators and investors. You need to make sure that the payment rails are working easily and much better. I was just looking at Reddit yesterday. And in a UAE Reddit, they were still asking, guys, I want to sell 0.18 of Bitcoin. How can I do it? And you had I think about 30 different responses, and none of it was clear. So these are some of the basics that I think we need to establish, and the future should look like this: a clearinghouse, lots of broker dealers, clear legislation, clear aspects about investor onboarding, how you can take it out. They should look similar to other asset classes. So that's the future that I see that will happen in the next 1 to 2 years.
Well, I like that picture that you have painted. So yeah, I'd certainly hang that on my wall. Thank you, Bhaskar. I think as we finish up the questions there, what we'd like to do now is move to the Q&A, if that's okay. So I think we'll start to see some of these questions pop up in front of us. So question one: how much further ahead are VARA, ADGM/FSRA in comparison to the SEC in the US?
Two different planets.
I love it. Okay, two different planets. Okay, I guess we'll also find out more after the election as to maybe things will change there as well.
No, I can't see that.
Really?
I'll be very honest with you. Look, I mean, there is, it's like the difference between the seed catalog and what actually comes up. Um, if only manifestos were that easy to convert into legislation and actual, there's going to be quite a lot of headwinds against the SEC managing to achieve that kind of an ecosystem, like, for example, what you're seeing in the UAE or Bahrain. It's a long way away. Good noises, but actual changes on the ground.
Yes. Okay. Yeah. I think Barack Obama said once, yeah, and change comes slow. Waleed, what kinds of data feeds would be most important for tokenized real world assets, or RWAs as they're known, such as cars, art, or other non-fungible entities, where factors like depreciation, wear and tear, or physical decay need to be accounted for to properly push further and wider adoption and bring more of the world on chain? Keen to get your thoughts.
Walid, I'll go back to what I was talking about before. One of the mistakes that at least I have seen whilst I was a regulator, and of course now, when people come up to me and say, would you like to invest in it, or can you help me with this, is that we are trying to look at the technology in an end to itself. If you're talking about art, if you're talking about horses, if you're talking about sports people, if you're talking about real estate, try not to think about the tokenization piece in the first instance. First, think about how are you going to manage a business by itself in the olden ways. Does it make sense? What data do you need? If you look at, for example, art you were talking about, can you actually value art easily? No. It's an art, if you don't mind me giving a very bad dad joke. Now, when you just don't have data at this moment to value a painting, some kind of an API is not going to magically produce the data or produce the mechanics or the models or the ways to backtesting check it. It's not going to happen. So what I'm trying to get to is that for these real world assets, first make sure that the underlying business works and the underlying data is there. Tokenization is not going to magically change that problem.
Got it. Thank you very much, Waleed. Thank you, Bhaskar, for the question and answer there. I think we have one more, which is magically going to appear. Given the rapid pace of regulatory changes, what steps would or should asset managers take to stay compliant yet competitive when dealing with cryptocurrencies in the UAE?
Look, I'm going to go back to what I was saying. The regulators over here are extraordinarily responsive. I talked about quite a lot of the hedge funds who are investing in for example, ETFs, etc., etc. We from the association side raised that with the regulators in, for example, DFSA. And if you look at the consultation paper that they recently issued, they addressed that. They actually took our conversations and points on board. So to answer your question, this is not so much about the competition. This is first about ensuring that the regulations are there to provide the level playing field so that the asset managers can invest in this. That's the first thing. The second thing is that you need to have, obviously, the smart people who understand this, but very importantly, and I reiterate, you need to not explain your models from the perspective of crypto, but the perspective of, if you will, the old money style of institutional pieces, value at risk, the Greeks, all those things. Explain the return or the hedging capability of your crypto vehicle from the basis of the old ones. That's the second thing. The third thing is be prepared to go after the new sources of allocations and liquidity. The crypto boys, they come in and they are going to ask for different things. Your KYC is going to be challenging from them. It's difficult to establish source of wealth. So a fund which is being backed by service providers or exchanges who can actually provide, and as I said, the regulator who can make you the first out of the block to make it easier for your investors to invest or get returns in crypto, is going to be the ahead of the pack.
Okay, a succinct and insightful answer as always. And Josephine, thank you very much for that question. Closing couple of points, Bhaskar, like at a personal level, when you're not doing PhDs for fun in your spare time, tell me this: what is your favorite, TV show or movie these days? What are you watching, or what have you recently watched?
I wish I could say I was watching TV or movies. I have this regretful tendency of falling asleep in a movie theater, which means that my cost centers absolutely refuse to go out with me. Uh, so I
Okay.
generally spend my time curled up with a book.
Okay. And last book you've read, or best book you've read in a while?
I just read this absolutely fantastic book, which was a biography of John van Neumann. Um, and that is brilliant. I absolutely admire and respect that guy. I posted about him on LinkedIn. The author reached out to me. He's invited me to a dinner next
Oh,
week,
wow.
and we are talking about seeing whether we can put together some scholarships named after Ramanujan, who was one of the brilliant Indian mathematicians. Amazing things happen. Absolutely
Um,
gorgeous.
Amazing, amazing. Yes, I think that is the definition of manifestation. Yes. Well, you can share the update after that meeting on LinkedIn, which actually leads to the next question, Bhaskar. If people want to connect with you, follow you, learn more about you, where is the best place to go?
LinkedIn. I'm afraid I'm out of most of the other social media, but LinkedIn is it. I think that's the only place that can take me in guise of chief mischief officer, and I can get away with saying all those things.
Okay, well, now we know where to find you. So honestly, always a pleasure talking to you, Dr. Bhaskar, and soon to be the third doctor. I have no doubt about that. Always a pleasure. Really appreciate your honesty, your wisdom, and your insights. So a big thank you. Um, Also, a big thank you to everybody who's listening in and watching. We will be continuing the M-Tuned M2 podcast series, so stay tuned for the next session, which will be up before too long. And as always, M2, we are an Abu Dhabi backed. We are a fully regulated crypto investment platform, and also offering market leading yields on a number of assets. So please do check out our website, m2.com, to learn more about those. And a big thank you to everybody for dialing in, and see you again soon. Thank you.
Thank you.